If you're living in Florida, I don't have to tell you, those insurance rates are getting crazy. 400% increase, some even say a 900% increase. Check it out.
When David Bryant received a depopulation notice in the mail from Citizens Insurance, it didn't come as a total surprise.
There's been a dance with me going on Citizens and going off of Citizens.
He is one of 100,000 Florida property owners now covered by Citizens, getting offers of coverage from Slide Insurance, a Tampa-based company founded in 2021. The letter's opening line said, "Great news.
We've found an insurance company for you." What's the bad news?
The bad news, it's about 4.3 times what I was quoted for Citizens.
The premium for the same level of coverage from Slide was $14,684 compared to $3,403 from Citizens.
Do you think that's in any way a reasonable rate? $14,000.
No, not at all.
You know, I still have a lot of friends there. It was such a struggle for people when hurricanes hit. I had friends with good insurance, paid for decades, and when they had legitimate claims, they had to wait 4+ years and even hire lawyers for insurance to pay up. One friend ended up giving up and just sold her home with a destroyed roof for the land. I definitely think that we need accountability here. The recent insurance rate hike crisis in Florida has been a significant concern within the industry. In some cases, Florida residents have reported insurance premiums skyrocketing up to 900%. And as you can imagine, this is leading residents to drop their insurance, considering selling their homes, and even moving out of the state of Florida. For years, the sunny, vibrant state has been the go-to destination for lots of Americans. That's also what's been driving up demand for housing, especially during the pandemic as home prices were going through the roof. But while Florida was the #1 state in the country that people moved to in 2022, it was also the one with the highest number of residents waiting to relocate. According to the U.S. Census Bureau, an estimated 275,666 people left Florida in 2022, nearly 23,000 people every single month. Most, according to the Bureau, relocated to places like Georgia, 46,884, North Carolina at 42,301, Tennessee at 36,200, South Carolina at 31,456, and Texas at 29,975 people. You can probably guess the reasons why. The rising cost of living, the skyrocketing home prices, high property taxes, and the ever-growing risk of deadly and devastating extreme weather events like hurricanes. Let's not even forget about the increasing HOA premiums. The state's insurance premiums, which are the highest in the country, are also one of the reasons why Floridians are considering leaving the state, as many can no longer afford insurance for their homes. Several homeowners have said that the increased cost of premiums have led them to completely or partially drop their insurance and even consider selling their properties. And the numbers definitely back it up. Home insurance premiums have tripled in the state in the past 5 years, with residents currently paying on average more than $4,200 per year. The national average is $1,700 according to the data from III. Some insurance premiums have risen by about 9 times what they were previously in 2022, with multi-million-dollar homes generating premiums costing as much as $600,000 a year. This happened partly because it costs a lot more to build homes now. Construction costs, which are taken into consideration when determining how expensive it would be to rebuild a home once destroyed, have risen by a staggering 40% since 2017. In Florida's challenging market, 7 insurance companies became insolvent over the last year. Also, there are lots of legal issues happening in Florida, which we will get into later. But what's really got experts worried is what could happen if a big natural disaster like a hurricane hits the state, because many people in Florida don't have insurance. Not having insurance is really risky, especially if you live in the state of Florida. If there's a storm or a fire and they don't have insurance, they could lose a lot. But because insurance costs are going up and lawmakers in the state are still figuring out how to deal with big insurance companies leaving, more and more people in Florida might decide not to get insurance for their homes. But let me tell you another big reason Florida insurance rates are skyrocketing, and it has to do with the major companies like Blackrock and Vangard and their ESG policies, i.e. their environmental, social, and governance policies that have made Florida $2 billion away from the company. In fact, some people are saying that since Blackrock and Vangard and all those major corporations are buying up all the single family houses away from local families, then there should be a corporation housing tax 30% on these companies and use these taxes to subsidize lower insurance payments for residents in these high-risk states. These corporations own 80% of the stock market. They can afford to pay 30% tax. Yeah. More on Blackrock and their ESG push later. But first, I want to quickly thank you guys just for watching this video and for lighting up the like button. I really appreciate it as always. Don't forget to subscribe to the channel and tap that notification bell. That way you don't miss out on any of the important updates like this one and future documentaries that I do release. Anyway, let's get back to it. You definitely need to hear how high insurance rates are getting. Now, I've heard stories about the Windstream portion of people's insurance going from about $10,000 a year, which is not cheap, to doubling to $20,000. Some insurance agents are flat out recommending to pay off your mortgage and self-insure yourself. Then again, for homeowners in Florida who have mortgages and are required to carry insurance, there's little recourse except for covering the steep increases. There are reports that because of these high insurance costs, some are being forced to leave the state. In many places, including California, Colorado, and Louisiana, there's been a steep rise in the cost of homeowners insurance. But it's particularly staggering in Florida, a state that already has the highest insurance costs in the nation. Many Floridians have seen insurance premiums go up by more than 40% this year. And despite efforts by lawmakers to stabilize the market, costs are likely to keep rising. The cost of homeowners insurance in Florida is more than 3.5 times the national average. There are lots of reasons for this. Among them, the 3 hurricanes that battered the state in the last 2 years, but policymakers and the insurance industry say excessive litigation has played a major role in driving up prices. Reforms passed by lawmakers last year and signed by the governor have begun to limit lawsuits. But nearly a year after the bill was signed, homeowners are still waiting. Basically, the litigation has gone down, but the premiums have not dropped. Another factor driving up insurance costs is climate change. Big insurance companies are using advanced models and AI to really understand the risks in places like Florida. Florida is dealing with rising sea levels and more dangerous storms. A real estate professor says that it's like the insurance world is seeing a big change. They realize that the risks have gone up a lot in recent years. There are more disasters happening, and they're more severe than they've predicted previously. Still, 5 new insurance companies have been approved to begin writing insurance policies in Florida. Even so, homeowners should not look for relief anytime soon. It's a similar outlook in California, Louisiana, and many other states, seeing double-digit increases in the cost of insurance. Experts say that if private insurers keep backing away from what they see as high-risk markets, the federal government may be asked to step in. Will we see a national wind insurance program? Will we see a national wildfire insurance program? Definitely something that's starting to become a possibility. I mean, there is a precedent. More than 50 years ago, because private insurance wasn't available, the federal government created the National Flood Insurance Program. But what are insurance companies doing? Well, I've got this one story from a friend of mine who was working for Farmers Insurance in California. Apparently, a couple of years ago, they rolled out a new computer system and there's still so many problems with it. But one of the things that they made sure to fix was a drop-down gender menu that includes non-binary and intersex. I think this perfectly illustrates where the priorities are in terms of ESG. And yeah, I mentioned ESG a while back and BlackRock losing $2 billion from Florida because of it. Florida is divesting from investment giant BlackRock, was one of the recent states to pull assets from the firm over its environment, social, and governance policies. The Sunshine State's chief financial officer, Jimmy Petronas, announced that the Florida Treasury would immediately begin removing roughly $2 billion in assets from BlackRock's control. They're saying that using Florida's cash to fund BlackRock's social engineering project isn't something that we've signed up for. It's got nothing to do with maximizing returns and is the opposite of what an asset manager is paid to do. They also explain how stakeholder capitalism or ESG standards are being pushed by BlackRock for ideological reasons or to develop social credit ratings, and how the effect is to avoid dealing with the messiness of democracy, and that it's undemocratic of major asset managers to use their power to influence societal outcomes. Sounding like corporate overreach to you guys, huh? Big financial companies like Blackrock, State Street, and Vangard have been leading a movement to encourage ESG standards like promoting a green energy transition and left-wing social priorities through the financial sector. But some Republican states and groups like the State Financial Officers Foundation are strongly against the ESG movement. They say it goes against democracy and hurts taxpayers because it pushes investments that don't result in maximum earnings for consumers. Florida, led by the GOP, is the largest state to stop investing in BlackRock. Missouri and Louisiana, also Republican-led, recently announced that they're moving a significant amount of money away from BlackRock as well. But BlackRock also has faced threats from the left for not being more aggressive in its ESG standards. New York City's comptroller criticized BlackRock, accusing it of not doing enough to fight climate change. They hinted that the city might reconsider doing business with BlackRock and other companies that handle the people's money, looking at how well they take care of climate issues. Then again, the money taken out of BlackRock until now probably hasn't affected them that much financially. BlackRock is the biggest financial firm globally, managing around $8 trillion. Florida's $2 billion is really just a drop in the bucket for these companies, you know? I mean, BlackRock, Vangard, and State Street, these three companies alone already own roughly 88% of the S&P 500. And now they're coming after single-family homes in America? This makes things a lot more challenging for people trying to buy a home. We all hear these stories about somebody, a friend of ours or ourselves, who tried to buy a home, was about to put the money down, sign the contract, go into escrow, and at the last minute, somebody comes in with a cash offer and just takes it off the table. And you're saying, who is this with the cash offer? And so you look into it and it's an LLC with an ambiguous name. And if you pull the strings and follow the breadcrumbs, that leads you to BlackRock, State Street, and Vangard. As Democratic presidential candidate Robert F. Kennedy Jr. pointed out recently, so they can outbid you and they can outbid your children. Our families are now competing against these companies, which are trying to buy every single family home. Definitely something to pick up on our next video. I'll see you guys there.